Hello, everyone. Thank you so much for joining us today for the AMA with Narayan and Sarath Naru. Today, like Sarath Naru is from VentureEast. Before he was an entrepreneur, he started as a brand manager, so he comes with a lot of experience. For those of you who don't know, VentureEast is one of the oldest VCs ever found in India. And Sharad has the experience of founding it, and he was the one who got it from public to a private. So I hope all of you have come with a lot of questions to ask him on how to make the best of this crisis. But before that, THub CEO, our CEO, Ravi Narayan, will make you go through a small presentation and give you an introduction about what we do in our webinars. So Ravi, over to you.
Great. Thank you, Sandhya. Good morning to everyone. Very excited to be here with all of you. As a part of the series of webinars we've been doing with people in the investment world, VCs, this will be one of those. But this time around, we are especially honored to have Sarath, who is, I would say, the founding father of the VC industry in India. So even before the word VC was understood by this industry, he's been around. He's worked in Andhra Pradesh, very much associated with Hyderabad, THub, and so on. So we're very happy and privileged to have him. Before I get started with some of the points, I just wanted to walk you through a little bit of an introduction about THub itself. Because THub, as much as it is well known for the work it does, but it's like blind men looking at an elephant and saying, "Hey, this is what it is. This is what it looks like. This is what THub is," and everybody seems to have a different perspective. So I want to try and see if I can bring all those different perspectives together. Yes, we are a combination of a lot of things, but at the same time, we are unique in the sense that nobody else in the world has anything like this. And hopefully, just like we aspire to become a Y Combinator of India or whatever, as people would say, I would like to think that people sitting in Berlin and Tel Aviv and Silicon Valley to say we want to become the T hub of US or T hub of Israel, and that's the aspiration that we have, that we create a very big brand which is not just driving startups alone, but also driving the entire ecosystem so that the startups can really thrive. So what I'll do is I'll share my screen with you. Can you see my screen?
Yeah.
Yeah, great. So we have a comprehensive view of being an enabler and an empowerer of all the different stakeholders that are there in this ecosystem who are looking to innovate. There may be startups, which are the usual suspects. There are corporations that are now facing this existential dilemma of what to do. Do they hunker down and just survive the next few years, focus on their quarterly results, to innovate along with startups? So we do a lot of work with them, investors, academia. We are located in the IIIT Hyderabad campus. We work very closely with the academia and research labs, all located in the state, in the country, and we also work very closely with the government, as you would expect. We have a three-pronged strategy. First prong is startup innovation, as in we work with startups all the way from the very beginning of their journey in incubation mode to acceleration to scaling. So we have the entire gamut of those services that we can offer startups. So look at us as a partner for life. Come to us into the family, and then you're there as long as you are building a business, you're in the entrepreneurial space. I mean, there's a place for you in some program or the other. If it's not our own program, it will be a program from one of our partners. The next thing that we do is what we call as corporate innovation. Like I alluded to in the past, as much as we do a lot of work with these startups can only grow and thrive up to a certain extent. What we really would like to see is how do we open up the demand for those startups to really sell into the corporation, sell into the government, organizations, so that they do find a market, they do find very large markets to really thrive. So we work with corporations from the very beginning, which is emerging, as in they are beginning to understand that, hey, not all innovation has to be done internally. It can also be done as a collaboration between internal resources, internal innovators, and external innovators. And in the case of external innovators, these are the startups. So that it's almost like a speed dating. Getting to get them to know each other. Not very concerted yet, but going into the coordinated set of programs, it is to actually to drive POCs, proof of concepts, taking startup technology, startup business models, and trying to use that to augment the kind of capabilities that the corporation can offer to their customers. And then transformative is actually transforming their entire products to incorporate in large extents the technologies and the products and methodologies that are coming from external partners such as startups. And then, of course, disruptive is where they begin to think about, okay, how do I reimagine the market? What is it that I can do in terms of a business model to enter the markets, and especially the last piece that we are very proud to do in the ecosystem is the ecosystem innovation. As in, while we have the startup innovation, which is the supplier of innovations for us, corporate innovation happens to be the demand generation of innovation in the ecosystem. Ecosystem innovation office is all about building capacity, building more and more mentors for the ecosystem, building more and more angel investors for the ecosystem, building more and more incubators for the ecosystem. So this is about building those capacities in the ecosystem so that we can thrive together. At the same time, also use this ecosystem as a place to make connections with foreign governments, their trade offices, on how these startups can access foreign markets, and the startups from outside of India to actually access the Indian market through THub. So these connections is something that we work on very diligently through the international programs that you see here. And there are programs that are specifically about go to market, but there are also programs about raising money outside of India. So these are the connect programs that we create between ecosystems, and that's how we giving access to our startups to the kind of thought processes, the kind of ecosystems, the kind of markets that are there outside of India as well. So this is kind of the comprehensive picture of what we do at THub. So you will see one or the other element showing up, either in a social media post or paper. But at the end of the day, we do all of these things because we feel that by doing one of these things, it's almost like pushing a string. You don't have the ability to really create the kind of impact you can. So to take a much more comprehensive view, although it's very complex and difficult, but we feel if you don't do that, then you're really not able to make a huge change. And we have so much that we can we have to do to build this ecosystem. So why not take a much more concerted view? So when COVID happened to us, while this was a great model for us, and a lot of these things were happening within our building is looked upon as a great sightseeing thing whenever anybody comes to Hyderabad. After Charminar, I guess we are the most visited building in Hyderabad. But we also wanted to take away this dependency on then coming to the building to engage with us. How do we do this virtually? How do we make this thing in a way where you get value from THub without having to step into the building? Is what we've been grappling with over the last 2.5 months. And webinar series is one of the things that we came up with, where we would actually be able to engage with our stakeholders that I'm talking about. So we have 4 different types of webinars. One is handling the hard time. A lot of these discussions we had in the early days when people were thinking about existential crisis. Will I be able to make it past this thing? What will the new normal look like? Those kinds of issues. Um, we don't do those many of the handling a hard time yet, because at this point in time, because we feel that a lot of people have reconciled to the fact and they've begun to make plans going into the future. So the business unusual are the next set of webinars where we talk about the best practices, which most of the startups would have very um, forcefully pushed away, saying, no, this is what large companies do. I am a startup. I don't want to do this thing. And we are saying, no, there are certain good things also. Don't throw the baby along with the bath water. Just make sure that there are some good aspects of project management, planning, target setting. For example, target setting was a very important thing for a lot of people who are working from home. How do you take the goodness from some of the practices that are out there and use it internally, because you are now all the people in the startup are working from home. So target setting, project management, monitoring, best practices of code development, testing, DevOps, or all these things we just went through, so that people can become a lot more efficient. A lot of people took the time to relook at their codes, create a lot more efficiency in the way that they could be deployed, tested, and so on and so forth. So we were helping them with that. Then there is plan B, as in, what if, this new market actually opens up a completely new set of opportunities? How do you go back to the fundamentals of the current business and see if it can be expanded or changed to take full advantage of the opportunities that are in front of you? And then finally, the AMA, that what you see here today, is just an open dialogue between us and an industry leader, a thought leader. In this case today, is Sarath Naru, somebody who's been there, and Sarath has seen several different ups and downs in the industry, and can tell you that this too shall pass. There are, of course, some professional advice in terms of how to raise money, what are the things to look out for, which is what he can bring to the table. But in addition to that, as people who are who have this very large view of the ecosystem, who have this large view of the time frame that we have worked in, can give you some advice from a human standpoint. How do you really go about making these things happen? So that's what AMAs are all about. So these are some of the sessions that we've had in the business as unusual. Some of the sessions in Plan B. As you can see, a lot of them are VCs, entrepreneurs in these areas. In the AMAs, we have had so many. And then next, we've had, of course, lots of partners who leverage our webinars, and we leverage theirs so that we can serve our communities. Next, we have also got a webinar tomorrow in the B2B sales that Upeka folks, Rajan is going to run. And then the next Friday, going to be with Anil Joshi of Unicorn India Ventures as well. So this is kind of the kind of engagement that we're continuing to do. But while this may be kind of high level, maybe one-sided in terms of the discussions, we also have a lot of mentor hours that are set aside. So if you have a specific set of concerns, issues that you would like to discuss with us, reach out to this team that has talked to you, Sandhya, Vinuta, and others, and we will put you in touch with the mentor so that you can go deeper into your specific set of issues. Bring in as much information as you can so that there's a deeper conversation around it, and therefore we can give you an idea on how to do Plan B, or how to get your processes and your cash flow in a way that you can actually get past the initial hurdles that you have today, or get to a point where you will be able to implement Plan B. So all of these things are possible. So that is another set of activities that we're doing. So please do take advantage of all of these things. So with that, what I will do is I will turn it over to Sarath to start with his opening remarks. and then we will open it up for questions. Sarath, welcome. Sarath?
I think he is on mute. Would you like to take the first question then?
Sure.
Hello.
Do you have his phone number to make sure that he gets online?
Yeah, I'm trying to text him. Hello, Sarath sir. He's online. He's just unmute. He's not unmuted.
Can you hear me?
Yes, sir, we can.
Yep.
Okay, perfect. Yeah, perfect. Sorry, my hardware is misbehaving, and probably you're a beneficiary of that because you don't have to see my, my bad-looking mug. Okay, Ravi, I guess you finished your spiel, and you want me to say a few words from what I recall you said earlier, and
Yes,
then
please.
we can open it up to questions.
Opening remarks.
Yeah, just to thank you, Ravi, for inviting me, and thanks to the THub staff, and thanks to the entrepreneurs who have joined this session. Just a couple of 2-3 points before we jump headlong into hopefully what is not a Gyan-giving session, but hopefully that's something practical and useful for you. First point is I and Ravi go away long ways ago, and of course he's also much my junior from IIT Madras. Never got to rag him, so that should tell you he's much younger than me. Number one. Number two, I have a lot of fondness and regard for THub, and we've tried to engage as much as we can. And I think a relevance for a kind of THub which has already been innovating, if you will, in the field of entrepreneurship development and building up new small businesses, innovative businesses, if you will. The whole concept of an incubator / accelerator, is the question is being asked, but I think given that they're innovative themselves, I see there's going to be an increasing need, and we'll come back to that for outfits like THub. The third point is essentially about briefly about VentureEast. We have been around for a long time, but the main point is we continue to stick to early stage or VC investments. We don't do as much of seed stage investing. We're certainly Series A, and that's been our main focus. And we have an office right here close to THub in the financial district, as well as we have an office and team also which sits in Bangalore, and an office and a team that sits in Chennai. And you could reach us anywhere. And finally, coming to the current situation and what prompted Ravi and THub to create the series of talks. I think I heard Ravi mention that we've gone beyond the immediate reaction to COVID-19 and how do businesses, particularly the startup businesses, how do they have to behave? You mentioned that we've had enough of discussion on that, and by now we should be looking at not the immediate reaction but the longer term situation of how do you position yourself for as a COVID relevant business in the sense in the post COVID world. I'm going to pause there, and rather than giving you broad general gyan in terms of what were the best practices in a pre-COVID world and what would be the best practices in a post-COVID world, and is there a commonality there, etc. I'll use the questions that anybody could ask me as a way to illustrate some of these things, and I'll stop there.
So Sharath, can I ask you the first question?
Please.
So Sharath, I'm sure you're already working very closely with a lot of the portfolio companies in the VentureEast portfolio.
Yeah.
What are the kinds of issues are you seeing amongst the portfolio companies uh, that you're grappling with, and what kind of guidance and solutions are you offering them? So just so that people can get a sense of what's happening in that world.
Right, right. So there are, of course, different kinds of businesses, but let's talk about the most common situation, and the biggest problem is going to be where the revenues and the immediate relevancy of the product or the services that's being offered by the company is immediately hit. So the revenue fall and drop is the most immediate impact of this COVID situation. In some cases, there's been the ability to execute as well or run the operations where because of COVID, you're not able to have a fully staffed operation running, and moving to home and working on it has not been an option or not been an easy option. So what does either of these things result in? Immediately, it's going to result in a loss of revenue, loss of income. So that boils down to cash flow. Now, again, this is something I'm pretty sure that each of the companies feels very directly and has been addressing it on a daily basis. And this would be one mantra I would say. How are you? Because the business will turn, hopefully, if as long as your business is COVID relevant in the post-COVID world. And when that happens, you need to be able to survive and be able to continue to build, sustain your business till then, and be able to launch in a more, let's say, refined manner, being more relevant to the world after the COVID impact has somewhat died down. So again, this is general gyan, but the only thing I can tell you is general gyan. But we've seen this has been a primary problem: revenue impact or operations impact leading to cash flow impact. So obviously you have to stretch your cash flows as long as possible, cutting costs with a humane touch if possible, and then raising third-party capital. Uh, Go out and keep getting that war chest ready, war chest in the sense of being alive and being able to continue the business once the COVID impact dies down. Those are the kind of actions that our companies have done, and we've also are asking our own LPs at the fund level to give us more money so that we could give it to the companies to fight against the COVID situation in a very special at a very special time. So that's the overall one sequence of event that's been happening. The second broad action that's going on is essentially about how relevant are we in the post-COVID world? And that has a combination of questions, including, can we do a mini pivot, or can we actually leverage our current strengths to be more relevant in a new product or a service, but at the same time using the current strengths and of the company on the business to be able to provide more other services while you're not able to run your regular business. That's the second broad theme of how what we're seeing in the portfolio companies. And that again, while the first one was fairly, I think, evident on the actions to be done, second one is a little bit more complex and difficult, because there's a tendency to say, we can do anything, and we can actually, even do stuff maybe where you don't have a competitive advantage, and the belief that, you just jump in there in something and it's a level playing field, and anybody can succeed in a new kind of business area in the post-COVID world. But that's not the case. I would say, as always, and this is one of the things that would come back from, which will not change even in the post-COVID world, you having a competitive advantage that you can build on or build towards even is going to be very relevant vis-a-vis any business or any mini pivot that you do. And that's going to be very critical for you to think about, rather than having a knee-jerk reaction and launching a new variation of the business that you're doing, to understand, will you have an advantage? And then you get into the second level of questions, such as, will the consumers really see you as being different? How will you acquire them, etc., etc. So this was the second broad theme on the becoming relevant and more relevant in the post-COVID world. Those are the kind of issues that we saw. I think a third one, which is more a personal and internal one, and I think it may have relevance to every entrepreneur, is to have patience and to have persistence in this world. I mean, it's a very qualitative example I'm giving you, primarily because that's what is happening in our own company, if you will. How do you feel that you can help your portfolio companies where the world COVID impact, it's still not known what is the level of impact that there's going to be. When the full transition is over and we can get back to near normal, if not the old normal, but a new normal situation. So this requires you to basically bide your time from the perspective of not only pushing along the agenda. Our agenda, for example, is to get our investors to provide more financial support to our portfolio companies. Second one is we're trying to see how do we become more relevant and more competitive in the post-COVID world. Can we be working on something now which continues to strengthen our position? For example, what THub is doing with these webinars in serving their own communities. So that requires you to have faith in yourself and in your team, and also create this confidence and faith and belief in the team that that the end is near and things will settle down. But even if they don't settle down and there's a new normal, that you are working towards something that can be launched and delivered, and there is excitement within the company, there is excitement within the community and your buyers, etc. as well. So that's the third qualitative point about patience and persistence I would urge the entrepreneurs to have. Ravi, are you guys there?
Great answer.
Yeah, thank you, sir.
Yeah.
Thanks.
So we'll start with our question, like taking up questions. So we have many questions here in the tab. I'll just read out one. What Indian manufacturers, particularly MSMEs, need to do to expand their business from a domestic market to export-oriented market? Should I repeat myself?
Yeah. No, I heard the question. What Indian manufacturers need to do in order to go from domestic to exports? Was that the question?
Yes. Yes.
Yeah. So let's. I'm assuming that there are two ways to answer this question from a target audience perspective. One is it a small business? And you said MSME, I understand that, which is building an innovative business, or is it a medium scale to large scale business? Very different situations. Manufacturing wise, at least while there is a big movement across the world of moving away from China and moving in manufacturing resources in India, which is a very positive thing. Having said that, one of the things that we should be aware of is that most of these export markets, most of the buyers which are immediately going to come are going to be businesses that require large scale. We need to be able to deliver capacity, the kind of capacity that Chinese suppliers have probably been offering to the Western and the Eastern countries right now. So in a sense, the MSME sector has to look very carefully about, can we be able to offer the scale in that specific sector. Again, every sector, there could be different levels of scale involved. The more commoditized, the larger the scale. And make an assessment, first of all, should we enter into exports at that, in that specific, without having the scale. Without having the scale, jumping into exports my belief is, might lead to a lot of effort, but no outcomes. The second thing the MSME could do is to basically, if they believe that they have products that are relevant to the export market, but they do not have the scale, is essentially to partner with the larger boys who have scale to be able to offer manufacturing capacity to companies which can attract the overseas buyers who are moving from China to India. And I've seen examples of that, in fact, including in the area of ventilators, where we're seeing that this kind of partnership of smaller people, smaller manufacturers, they are joining hands with larger manufacturers in order to be able to build up capacity and be able to supply the overseas market. I think that's the primary advice I would have.
Okay, sir. Ravi, you have anything to add on this?
Yeah, I'm sure, as I said earlier, the markets are going to change. In what way, we are still trying to figure that out. I would suspect a lot of the opportunities are going to get more global as we go along, that's for sure. There is also the advent of advanced manufacturing kind of capabilities. I was quite surprised to find out that Bangalore has got a lot of startups that are helping with this whole advanced manufacturing capabilities in this city. So I'm sure there are lots of things that we can do as a combination of good competency in the manufacturing area and also a lot of IT and data driven kind of capabilities that we can bring to the table. But that is the execution side. But in terms of the market, what is it that we can, what markets can we address and how can we deliver to those markets? I think are things that we need to figure out along the way. But I'm hoping for as many of good surprises than bad surprises coming out of the COVID. So we'll have to wait and see how this thing unfolds.
So I have another comment here, Sandhya. One is on the services side as opposed to manufacturing. Increasingly, the whole, the regular BPO, KPO kind of business proposition. Now I'm moving from manufacturing, I understand, but in terms of servicing overseas companies, while there will be a reasonable amount of wanting to do their manufacturing, their only services, etc., within their own country, not wanting to export, not want to have imported from overseas. We believe that the level of digital content or online kind of delivery of services is going to be significantly increasing across the board for both SME clients in overseas countries such as in the US or Europe or wherever else, as well as in large companies. Every business which has traditionally seen itself as a regular, offline, face-to-face, brick and mortar business will have a very large component of online and digital kind of component that has to be serviced because of the COVID situation and because of the new normal. And our belief is that this allows itself to lend itself to increasing a faster opportunity possibly for even smaller businesses who are delivering online services to be able to do it out of India.
So moving on to the next question. It is from Srikanta. We are working on a pharmaceutical intelligence database project and we are looking for investment. What would be the way forward in today's market scenario?
What is it again? Pharmaceutical? The name of
intelligence database project.
Intelligence database.
Pharmaceutical
Okay.
intelligence database. Yeah.
Right. So this is a good question. Let me first start by telling you what's happening in the overall investment market, if you will, of both VCs, angels to an extent, and then jump into how should one's reaction be given this. Certainly, the VCs have been themselves and then they've been asked by their investors to essentially reserve capital for their existing portfolio companies. In fact, in some cases where our funds are fully depleted, we're also asking our LPs or investors to give us more money, primarily to help our existing portfolio companies. So level of investment amongst the VCs is currently certainly at a low key and lower. There is a reduction and it is lower than what it was normally. Now, I'm not saying it's zero, but that's the situation. Now, in terms of angel investing, I have not seen such a drop in investing. I'm still seeing, as part of, angel investing communities in Hyderabad and in Chennai and in Bangalore, there may be a moderate dip, but the deals intent or interest to invest in new deals is still on. I think the angel community has not been used to doing follow-on investing, but I think they will start slowly also allocating a little bit more money, but to their existing portfolio companies rather than pushing them to raise money from outside only. So bottom line, seed and angel level, there seems to be a better activity going on than at the VC level, which is Series A onwards. Given that, I think I would certainly, if the company is at a stage of requiring VC funding, certainly reach out, but don't have expectations of a quick action. I think there are better possibilities of raising angel monies, doing all the right thing that you would have done even in the post-COVID world in terms of, what is so special about your business, what is your, sustainable competitive advantage, why you are the right people to deliver this service or product, those kinds of things. And then are there initial clients, are there beta clients who are essentially engaged with you and giving you appreciative feedback? Those kinds of things have to be done. And I think once that is done, if you can, on top of it, make the case that in a post-COVID scenario, you are very relevant still, and you will be maybe increasingly more relevant, then that will be the icing on the cake for the angel investors.
So, Sarath, do you think the instrument is still equity as far as follow-on rounds are concerned for seed and angel investors, or is there some kind of convertible that they are leaning towards?
Yeah, good question. Because Ravi, we've been struggling with that with our existing investors, and as we invest in these companies, the big issue about equity is that you're going to be getting into unnecessary, endless discussions and debates, if you will, on what the valuation should be, even though there's been a dip now, and that is understandable. I think we are pushing, in fact, for our more mature companies to do a simple debt, simply because it removes all this discussion and debate, and entrepreneur can focus on what the company needs to deliver, using that capital to, again, to build, sustain its value, build back its value, if you will. But these are more mature startups where they've gone through maybe 2 rounds of funding, sometimes even 3 rounds of funding. But in the case of early stage companies, I think it would make sense to certainly be having convertibles at a discount to the next round. I would certainly urge the entrepreneurs to do that. If possible, if they want to simply give it at a discount even to the last round, I would say please do that. I think getting capital now at this stage is and to be prepared for a long haul is possibly the most wisest thing one could do.
Also, are the venture debt guys becoming any more creative? Are they doing things that are not necessarily as a follow-on to a venture round, but also looking at debt opportunities outside of that?
Yeah, good. Again, a good point. Ravi, I think they are attempting to, and I can tell you a couple of engagements we've had where we're trying to provide a creative angle to how the venture debt people can participate. Typically, at least 99% of the time, I would say, if not maybe 90% of the time, venture debt people want an equity investor along with them. Most of the time, of course, it has been VCs who've been investing, and then they would come in on top of that as debt immediately soon after, if you will. So I think if we can get venture debt company funds interested, and they are interested, they've come back into business. There was a bit of a hiatus in the month of March and in the month of April and till mid-May. We have the venture debt companies actively engaged with our portfolio companies, but structure-wise, they're the same as before. I have not seen any difference. So we have tried to propose for a couple of the IP-oriented businesses that we have, where these are usually binary in nature, where they win big if they succeed. If not, you write it off. You may get something back, but there's nothing to write home about. We are working on an exercise to bundle such companies together along with a company which are more steady, if you will, in terms of its revenues and EBITDA, etc. And saying that you give as a group money to this pool, and any exit that happens, we will be able to, first fulfill your return of your capital and return of your interest before it is distributed to the shareholders of the fund or of those companies. So it's possible that maybe THub could play an angle here, whether they can group together a few companies and offer them as a package to be lent to the venture debt people. That's the one innovation that we are trying, where we are saying that when you pool together a few risky assets, then you can actually then the risk of the venture debt people comes down further. So therefore, that could become appealing to them.
Sure, we should talk about this. Yeah, it's interesting.
Sure. Certainly.
So moving on with the Q&A, we have Vipin, who has posted multiple questions. So I'll just hand over the mic to him.
Sure.
Vipin. Hello, Vipin. Can you talk? Can you hear us?
Yeah. Can you hear me?
Yes, we
can.
I can hear you. Can you hear me?
Yeah.
Thank you so much, Sarath and Ravi, for doing this. It's really helping us a lot. My first question is, so for an entrepreneur, if he has a startup idea and a business plan base, but he doesn't have a business, an ongoing business where he can show the revenue, right? But I have a business plan and an idea. Do you think with that, is it possible to get angel, or should I have a business running? Should I go get a funding from the angels?
So I'm sorry, there was a little bit choppy, the connection, but I think you're asking me a question that you have a business plan. It is not an ongoing business. You started a company, no revenues yet, but maybe some level of development of a product or a service. And how would you go about fundraising in the current situation? Is that correct? Was that your question?
Yes, he was asking about if he can approach an angel with that stage of startup.
Right.
That stage of startup.
Right. So two comments I have, right? One, I think you should recognize, while I said earlier that I think angels' appetite is still much better than they've not dropped as much as the VC appetite for making new investments today, irrespective. But having said that, I think you should recognize that it's going to be tougher than the pre-COVID times. Number one. Number two, if you have the ability to show that your business proposition has a strong relevance in the post-COVID world, and you're addressing a sector where COVID has actually enhanced its the relevancy of your business proposition, then of course I think there's a better chance. I think as an entrepreneur, you should certainly try. You should talk to angels. That's one thought. The second thought is, unless there isn't a lot of effort and money and time and etc. invested in the current proposition, I think it's worthwhile looking at very seriously on, is this proposition going to be relevant, or should I pivot to something else totally? So these are the two suggestions I would have. You should certainly go and approach, but when you go and approach an angel, please be prepared to answer COVID-related questions, particularly the relevance of this proposition in the new world. And the second thing is, if you can, unless of course the proposition is so strong, you should look to see, question yourself whether this business is truly relevant. If not, be prepared to pivot.
Ravi, do you want to say anything?
I'll just add a couple of comments to that. Yeah, Sandhya?
Go ahead.
Yeah, so just to add to what Sarath just said, so obviously, things have not changed as far as how people will evaluate a business plan. They'll look at the same elements as they have done before, so nothing changes. Obviously, your ability to have the clarity, your ability to articulate why your business requires money, why is it a good investment, is something that continues to be very, very important. That you should be able to add off of all these things is if there is a certain element of urgency, if there is a level playing field for you and a bunch of other competitors, and if you are able to move much faster by raising money a little sooner than actually having gone out there, created some products, got customers, some use cases, some success stories, and then come back to raise the money. If you're saying I can leapfrog to the second step or the third step, and therefore you want to go faster, there is some it takes for you to have the clarity that indeed there is an urgency for you to raise money without having proven a lot of these things. You still have an idea which seems to be looking very good. Only then would you rush through this process. But I would suggest that you maintain the same rigor that you would have maintained had you approached investors even before the COVID era.
Moving on, we have our next question from Satyanarayana. He has raised his hand. So Satyanarayana, I'm giving you the mic access. Hello.
Hi. Thanks, Mr. Sarath and Mr. Ravi, providing this opportunity. So it was a really good session. So we are doing business in the area of hospitality industry. Right now, it's a big hit due to this COVID. So what is your forecast and how we can move forward post-COVID in the hospitality industry? Any thoughts, any suggestions?
What exactly are you doing, Satyanarayana, in the hospitality sector?
Yeah, in the hospitality sector, we started a business called showmyhall.com, which we aggregated all the marriage halls, function halls, all related to the events and everything. We aggregated all the vendors. So we are doing good business for the last 2 years in Bangalore. We wanted to expand into the Hyderabad also. So with this, because of this COVID, suddenly with government norms and all the marriage halls, all gatherings, everything got suspended right now. So our business completely affected. Our revenue from X now become a zero now, right? We don't know what is visibility, right? So we are completely, I think, we are clueless right now.
So I certainly empathize with you. Having said that, my personal belief is, given that you're not one of those businesses where there is a huge investment such as Taj and ITC and Oberoi's in huge infrastructure and buildings, I think you're in a fantastic space. And nor do you own any marriage halls yourself. I think you're in a phenomenally position to to address the post-COVID world. And this situation is going to continue, at least from the point of view of congregating of large numbers of people not being allowed or not being possible, maybe for the next couple of years, until you have a proper vaccination that comes about, etc., etc. So what is the opportunity, you could ask? Today, I think from what I understand from regulations, you're allowed to have 50 people joining in a marriage hall. right? To go for attend a wedding, right? Now,
Yes.
there are two possibilities I see for you, which is, see, you might be invited, but I think it's very important and very relevant, and it's also very responsible of the hosts who are inviting their guests to ensure that everybody is in a COVID protected environment. So there is an essential service you could be offering, and this service could be in collaboration with the marriage hall, where then so they now have to offer small halls. About how do you provide a COVID protection stamp with that? So basically, you go and validate that COVID protection at a 5-star level can happen in this marriage hall. Essentially, a service that you work with your marriage hall people, etc., that you are going to be able to offer COVID protection for anybody that hosts an event in that hall, right? That is one angle I can see. The second angle you have to see is that particularly in Indian weddings, 50 is something everybody is going to laugh about, because 50 is not even the immediate family of the couple. It's going to require a whole lot of, I mean, it goes into hundreds for sure, if not 1,000 plus for a lot of other marriage halls, function halls that are operating in Hyderabad. So I think this is where I think you need to apply your mind to how you could have virtual weddings possible going beyond the 50 people. How do you make and ensure a high quality experience of this virtual weddings at this in a live situation that can happen for your people that your community that you want to serve? I mean, these are. I mean, my belief is you have to look at what is the traditional requirement of the people who the service is being offered to. How can we fulfill it to the best way we can in the post-COVID world? So that's all you're trying to do. I believe that your business, given that there is not a lot of infrastructure, at least not from you, I think you can make immediately be able to do this mini, not even a pivot. It's exactly the same service, the same client, the same, your supplier base as well. You will have to, technology-wise, you will have to upgrade yourself immediately and invest a little bit there and make something happen.
Yeah, it's a great advice, Mr. Sharad. So actually, the following question, maybe Ravi can answer also. We have a platform. So in this situation, right, how to improve our platform to cater this post-COVID era? Actually, right now there are a lot of restrictions are there as such, right now. So since through our platform we are offering all these services and all. So do you think any enhancements made to our platform will help us?
Ravi, I think he wants your advice.
Yeah, sure. I think gave you some of his own ideas earlier about possible ways in which you can enhance your capabilities and also cater to a completely underserved or unseen market that has emerged from the pre-COVID times. So definitely one of the good things about this opportunity is that technology can be employed in a very constructive way to actually cater to these kinds of opportunities, all the way from providing the environment that is necessary for the guests to be there and knowing that they're completely protected, to multiple people being a part of it, their ability to send in good wishes, send in gifts, send in their and participate in some fashion or the other. I think it's a new way. I mean, obviously, it is not what we have grown up with for the last several years, but it is definitely the way things are going to be. So rather than fight and see if we can take it back to the earlier days, we actually try and enhance this experience of the weddings and gatherings in a much more meaningful way. And maybe it's also an opportunity for you to do something that we had not done before, which was the human connectedness that this whole technology can bring to the table. As you can imagine, the weddings that I attend, there is a very clear set of things. You go, you greet the couple, you go have food, and then you leave. Lots of other things don't happen, and especially if you're a friend. If you're family, also, there is multiple other things on your mind. How do you really be there with the family, be with the couple, send them your blessings. I think these are all things that you can make it more more human than it was before using technology. So a lot of things to think about.
Great. Thank you very much. Thanks for your suggestions.
Thank you. So I request all the participants to look at the chat box. I have put up a feedback form over there. So we would proceed with the further Q&A after we receive a few responses to that. This actually helps us to make all the sessions better. We take into consideration what our audiences are looking for, and we try to develop our sessions into that. So please fill up the form and tell us how you feel about this session, and we carry on with the Q&A. So meanwhile, Sarath sir, I have a question for you. I have like a thing. So I read in your bio that you were the first person who made who got the Indian venture capital that was public into private. So can you tell us what the scenario was like when you were trying to do it for the first time? How were you approached, or did you propose this to anyone? I just want to know the story around that.
Thank you, Sandhya. So I didn't want to correct too many things that Ravi said, but he said a lot of kind words. But one thing is true, though, that when we entered the venture capital industry in India, which was in mid 90s, there were less than 10 firms. I would actually say about 10 firms which were actually engaging in I would say more SME equity finance as opposed to venture capital, mostly because most of these were government institutional led funds, such as the APIDC Venture Capital or Gujarat Venture Capital or ICICI Ventures. These ICICI Ventures was a public sector bank. It was owned by a bunch of other banks, which are all in turn owned by the government. And then you had IDBI Venture Finance Department, that again was a government bank. So at that point of time, the industry was very small and everybody was learning. So my approach was this was a good time. I gave you this context only to explain the point that we wanted to enter a space in India, and I had a wide canvas in the sense because I had not been in venture capital in the US. I studied finance in business school. I worked in marketing in Procter & Gamble. I did a little bit of trading of engineering goods and fashion goods in a startup that I had created, which was essentially a lifestyle business out of New York. But I had done some manufacturing in India. But having done all that, there was no venture capital experience. It was a totally new, but we wanted to get into an area where it was a relatively new space in India. So it was a level playing field in that sense. And we wanted to get into a space where the big boys was not necessarily the most successful people, meaning a big bank and a big manufacturing organization or a corporate were not the most successful people to do venture capital investing. And that's true even today. That was a thesis, and that thesis played out in the sense that we came to India with the idea of setting up a venture capital fund. It was a bit of luck that the AP government was looking to privatize their fund that they had raised with the World Bank support. And we were able to convince the World Bank and the other investors that we were better able to run this fund than the other competitors who were bid against us, such as CRISIL, such as Videocon. Then we also had the Mahindras, etc. So, and that's how we got our start. Therefore, it was I think they also were equally inexperienced on how to build venture capital. We learned most of it as an entrepreneur on the job and by reading about it and talking to others. And that helped us a lot. And we continue to be doing early stage in venture capital even today as a result of what we learned.
Thank you, sir. That was really insightful. I again request all the participants to please fill the form. If we have like around 22 survey reports, then we can proceed because that's the minimum that we require to get anything out of the data that you give us. So, Ravi, do you want to talk about anything that we the topic about of this AMA was to help identify people, identify opportunities in this crisis. So, what do you have to say on this?
So you're asking me a question about what kind of opportunities are opening up?
No, I'm asking you, like, you have seen the crisis before, like we discussed this even in our previous AMA that all of you have seen. You all have seen it before, like some or the other kind of economic crisis, maybe not a health crisis like this. So what made you be stable and persistent then?
Yeah, so I'll give you a personal anecdote. I was building this voice over IP startup back in 2000. And at that time, voice over IP was very new, very novel. And, we thought we were onto something really big. So we obviously, being engineers, love to build something very complex. We had also come from corporations. Anything small was not necessarily interesting or sexy enough. So we had a combination of boxes that went into houses, which would take voice data, fax, and everything else, and put it into one voice over IP connection, and then bring it to one central server. And then we would, build maybe a next generation telecom network. That was our, our vision. But the 2000 crisis, where pretty much everything melted away as far as our market is concerned. The telecom carriers pretty much went out of business. The young ones, the larger ones in the US continue to stand and stay relevant. That's when we realized that all our new customers were pretty much gone overnight. So we had to go back, and while we had the technology still, we had to pivot around the business model. So we did away with all the hardware pieces that were going into homes and small offices. We did only the central server that was sitting there, which was all software, and built the new generation of switching capabilities, and of all the different voice over IP calls that would come into this box. And basically, even without realizing what it is that we did, we actually created the one of the first soft switches, switches that actually were driven by software. So and then of course that when we sold it to long distance carriers, especially the international long distance carriers. So we went to a different market, different business model, different technology, but all that happened driven by this crisis. And thankfully, when we were able to come back out, we had some very, very large carriers across the world that were our customers. We had NTT, we had Verizon, we had Barak Telecom, we had Reliance in India. All of them were our customers. Wouldn't have happened had this crisis not hit us.
Yeah.
So I think it's time for us to wind up.
Yeah, sure. Do we take one last question?
Sure. Okay. Sarath, are you okay with one more question?
Here. I'm here. I'm good. Yeah.
So Sarath sir, it's actually many questions are here in the questions tab that are asking about the portfolio and the preferences of Ventureast capital itself. So do you want to shed light on that?
Sure. So I think from the perspective of seed stage investing or at a level which is pre-series A, we ourselves are not investing, but having said that, we are certainly very we do meet companies and then put them on to friendly co-investors, if you will, who do the angel funding and seed stage funding, etc. We're quite happy to engage with. That's one comment I wanted to make, that we do meet them, but we are able to pass them on or give a reference to others who do seed stage investing primarily. The second comment I want to make in terms of our own preferences, we have typically been in the last 4 years and 5 years at least, that we want to be part of businesses or investing or partnering entrepreneurs who are building businesses that have a deep technology as a differentiator and not just an enabler. I mean, for example, in the marriage hall business we talked about, at least at this stage, it seems like where technology is an enabler, it's not necessarily a differentiator because it's easily copyable, etc., etc. So we're pretty much in every sector that you can talk about, whether it is whether it's healthcare or fintech or education or any of these, where technology can play a differentiating role in terms of how they provide a better service to the consumer and to be able to also allow you to scale up faster. So that's been our thesis. Now, another element that we've been increasingly looking at, and I won't go into the specific sectors in the post-COVID world, but I would, without going into the sector, those are self-evident because we are typically being transparent or non-discriminatory about the sector. But I think some sectors become more preferable when it comes to the post-COVID world. But besides that point, I think one of the other elements we've been looking at is how do you build businesses that are highly data intensive, in the sense that they collect a lot of data. When you say technology, we're primarily talking about technology where data is a very key element of what kind of data is being collected and how it is being utilized. That's an angle we look at very closely. And we're also looking increasingly closely at where you can get proprietary data. And if there is data that can be collected through a piece of hardware or electronics, if you will, without the consumer or the customer having to go through additional effort and so on, then we're also looking at that as a preferential thing. While the hardware itself is never a competing or a competitive advantage, because hardware always gets very easily copied, but the ability to initially collect data and which is proprietary, if you will. When I say proprietary, not that you own it, but proprietary also from the sense of not being the kind of data that that the Googles and the Amazons and the Apples are not collecting. And this becomes very unique data set that can certainly help the business model of this company. So that's the overview of what kind of investments we're looking at.
Okay,
I hope
thank
that's
you.
helpful, Sandhya.
Yes, sir. Yes, sir. That's
You can
actually very
always mail me if there are more questions. Happy to address or give an opinion, certainly.
Yeah, sure. I want to say that also that sorry we couldn't cover all the questions that were asked today. So we'll get back to the speaker with all the questions, and maybe we'll mail it to you, or maybe we'll put it up publicly for everyone to see the answers and opinions of the speakers. Yeah. So Ravi, do you want to conclude?
Yeah, thanks, Sarath, for making the time to spend with our entrepreneurs who are out there dealing with the situation, but also hoping that with the right kind of guidance and support, they will come out and do something much more than what they had started out this whole COVID period. So thank you very much for spending the time. And for those entrepreneurs that are there, please do let us know. This is a very general one-to-many kind of a session. There were some questions, but none of these situations that we face are unique. I'm sorry. So I mean, it's not common that we can give you one Gyan session and everybody will be able to benefit. So whatever we can do specifically that is meant for your particular business, your technology, your markets, please do reach out to us and let's talk more. There are mentors that have signed up to help our startups a lot more than they have done in the past, primarily because they understand and are cognizant of the fact that there is so much to deal with at this point in time. So please do reach out to us, and if there's anything else that we can do to help you, we'll definitely do that. You're not in this alone. We definitely want to continue to be the third largest startup ecosystem in the world, if not become second because of this opportunity that has been given to us. So let's continue to work together and make sure that you guys are successful. Thank you.
Thank you all. Thank you, Ravi, Sandhya, Vinuta, and the team at THub and the Entrepreneur Group. Thank you all very much for allowing me to chat with you.